Benton,
Witten, happy Friday.
happy Friday to you. Guess what? I just forgot to rename our show, so it's showing up as the tax minimisation plan right now. But I think most of them know about wine and wisdom in the afternoon. Hey, there's Alison. Good to see you, Alison. Mate, it's been too long between drinks, mate. Way too long.
Has been. You've been a busy man, and I think I let the team down a little bit before that as well.
It is. The big wheel keeps on turning. But for those dialing in this afternoon, we've got Deanne, Zingesh, Alison. Good to see all of you guys here. Hey, it might be a bit misleading, the old tax. I've got a little the tax plan. Every investor must know, and it says less wealth coffee chat. Maybe I can change it right now. I don't know.
Let's see if we can do that, Jay. So
let me go.
While you're doing that, I'll
entertain the people, man.
Mate, I will. I'll just shout out there and just see how everyone's doing out there. By the way, if you're dialing in, please introduce yourself or say g'day and let us know where you're dialing in from. Just whack a state. Don't need to put your legitimate address in there. I guess I'll just frame up the show for today. So for anybody who's new, this is Wealth, Wine and Wisdom. This started about 2 years ago at the beginning of the pandemic, where Jason and I got together to dissect what was going on in the world of legislation, small business, property, investing, banking, finance, all the wonderful world that seems to be so mysterious to many people and made more challenging by the BS that you read in the news on a day-to-day basis. So we got together to try and help our communities out. And we've loved it. We've enjoyed it. Many of you have been on the journey with us now for a good couple of years. Some of you have been with us from the beginning. If you're new, that doesn't matter. You haven't missed out on anything. The best is still yet to come. Let me tell you about that. So what we try and do is to, I guess, use what would be getting up to about 60 years worth of combined knowledge in our individual fields.
Mate, I'm not that bloody old.
Combined, Jace. Combined. Of Jason, one of the true gurus of property education and property investing in Australia. When I say true gurus, because that term gets bandied around a lot, and he's definitely one of the most knowledgeable people I've ever met, and I get all of my counsel from Jason, as many of you guys do. And myself in the world of banking and finance, investment management, investment banking, both here and offshore. We've got a first timer, whacking your first name, first timer, because you're coming through one of our channels where we can't see the name.
Yeah, in the know who you are. Facebook groups, Andy. Yeah.
Yep. Welcome along. Great to have you here. And so, look, this is just all about us having a casual glass of wine, debriefing the week, and trying to, as I said, demystify some of the BS that's out there, because quite often in this connected world, information is not power. The right information is power. And quite often, many people are getting led astray by things that I think are going to come up in tonight's conversation a little bit. Jason and I have kind of coined it. I think it's maybe been used in different areas, but by what we're calling now clickbait journalism. And so it's to help you out with that. So we've got Herman coming in. Good to see you, Herman, or see you on our screen, all the way from Perth, dialing in early, finishing up a Friday early. What would be 3 o'clock over there now? John, great to have you here, John.
It's big shout out to John, and we've got a few of the regulars. Yep, no swearing today, Jeff. Yep, keep it PG. Well, we might call it keep it MA, but we can't promise anything. Already got a couple of questions. Alison saying, "Hey, Andy, what's the go with the share market? Things are looking a bit sad lately." Andy will dive into a bit of that later on, I'm quite sure. And we've got, hey, mate, there we go. I didn't know we could rename the show as we were going along. So done and dusted. We are on track. Wealth, Wine and Wisdom is back. And great to hang out with you, my friend, and everyone online. Fantastic to have you guys here. We got Melinda all the way in from Melbourne. A bit of a national show here. So, yeah, as you dial in, folks, give us a shout out where you're from. Love to chat. Love to see that in the chat. Andy, as we go along, there's usually a little bit. Well, there's a rough structure to what we get up to.
Mate, we're pretty rigid with our structure these days.
Rough structure, but folks, what we usually try and do in the first part of the show is we try to talk maybe about what's in the news and see what is going on out there. Plenty to discuss in the news. One of the things I think Jeff was saying that a bit of a laugh from an impersonator crashing the Prime Minister's press conference. it'd be good to see that. Anyway, I'm going to track that down later, Jeff. So thanks for giving us the shout out. There we go. Yeah, Jeff. Already, we'll be talking about that a bit later on. All the coins collapsing. Yeah, we've got that on our radar as well. So a little bit what's in the news. We certainly want to hear from you guys. What questions do you have? Alison's saying, hey, what's going on with the stock market? Jeff's going, what's going on with these coins, these digital coins, Andy? And certainly, folks, we're going to talk about maybe some things you should know. Like Andy said, our experiences combined, 60 years. That's pretty chunky, eh? There you go.
It's getting there. Hang on. I was wondering what you were talking about there. The experiences, mate. It's getting up there. There's a few grey hairs on my head now. Not on yours. You're young. You're the Queenslander of the two, and looking as sharp as ever. I'm starting to get dated, I think.
Mate, all good, mate. Oil of Ulan, and spend some time in the sun or something, whatever. Hey, but listen.
Oil of Ulan, mate, that's showing your age. I reckon I don't think we've seen an Oil of Ulan ad on television since Risky Business and Tom Cruise.
My mum used to make Oil of Ulan, so there you go. Used to use the Oil of Ulan, and so that's
Mother's
where
magic. Mother's secrets.
Yeah, mother's magic. Well, and also, mate, I went on a bit of a trip the other week, folks. I bought myself more wine than I can poke a stick at. So, Andy, I'm going to have some fancy wine.
Club. So, what are you drinking today, mate? That's the big question.
Well, I did open this the other day. It's not a bad little drop. A little pepper jack. Malbec. Yeah, it's nice. It's nice little drop.
And how many weeks has that been open?
Only one, but I just got to finish this off, and then I'll get on to the good stuff, Andy.
Might be running solo next week with the old wine and wisdom.
But I'll be able to show off my wine. I went, folks. Some of you guys might know Sam Saggers. Andy does. Andy called me in the middle of Sam and I drinking a few cheeky taste testers. We were down in the Barossa Valley in Adelaide, and we were doing a little bit of a jaunt there. But we decided to buy some wine, or well, I did anyway. And I thought I was buying 3 bottles each for myself and Sam of this very nice wine. And I filled out the form wrong, and I bought 3 cartons each of this very nice wine. So,
so we're going to be doing a Wealth, Wine and Wisdom week live from Jason's house.
I think it's going to take more than a week to drink all that wine, but we're stocked up and ready to go. We are ready to go for the rest of the year with Wealth, Wine and Wisdom, folks. But Andy, what's in the news in your neck of the woods, mate? Lots going on in the world of the share market, et cetera, et cetera. I think you should kick off this week's proceedings because the folks want to know what's happening with the share market, what's going on with inflation, et cetera, et cetera.
Mate, well, there's a lot in there. I think I'll start off with a little bit here. So what's in the news? Well, unfortunately, these 2 Muppets. Jesus. What an absolute colossal failure of common sense. Mate, it's not even worth talking about, is it?
Move on.
We'll move on. Far out. I'll tell you what. But I think this might actually become a little bit of a new segment in
the clickbait. I think it'd be a great segment. Tell me, folks, what do you guys reckon? Shall we review the clickbait headlines from the week before? I think that'd be a great segment. Instead of what's in the news, because that's a bit dull, the clickbait segments, I think that'd be a good segment. Let us know in the chat if you reckon that's the go. But, Andy, what is the clickbait going on out there in the headlines, mate?
Well, I found this, and this was from clickbaitjournalism.weebly.com, and I loved it because it actually had their clickbait journalism versus real journalism, a battle to the death. Which one will survive? And I thought, absolutely, isn't that absolutely true? So yeah, we'll jump into some of the clickbait. I just wanted to.
We've got a couple of votes. Chris and Jeff are in, so
Yeah.
yep, that's good.
Clickbait.
We only need 1 or 2 votes, and we're in. All right,
That's it. All those in favour say aye.
It's a yes for me.
Okay, it's a yes. I do want to use this actually just to plug a little bit that happened, and I haven't told you about this yet, Jace. What's been happening on my Facebook? A little bit of clickbait in itself. Had one of my posts go up, and then I saw myself, and I'm like, oh, Fenton Financial. Oh, it's the author. Thank you, Binance, for this initiative. And I was thinking, what the bloody hell? I was thinking, I thought about giving you a call, Jason. Have you on my page, Jace?
What are you doing on my bloody Facebook?
So if you ever see any of these cretins, bobbing around your Facebook, don't listen to anything. It is total and utter BS. They've literally created another Fenton Financial page. Looks exactly like mine, little bastards. And then they started dropping comments on my Facebook page. So look, if anybody sees these idiots, I've reported them to Facebook. But if you see it around, it is not me. Please, I'm not endorsing any of this.
You're looking at the real Andy Fenton right here. All right.
God, I almost need to reframe it, don't I?
I think Alison was like, "Yeah, you drank too much wine on Wine and Wisdom Friday, Andy," and started to post random stuff.
I really did. I was just sitting there going, because it just looked like me, and finally I actually pressed on it. It took me a while to figure it out. Finally, I pressed on it, and I went to a ghost site. So, the world is weird and wonderful. But mate, mine's probably more in the what you should know field for this week. So I might throw back over to you, because I know some of the things that you've got in preparation for it, and I've kind of dovetailed a few bits and bobs on mine. So for those of you who are interested in inflation, for those of you who are interested in stock markets, for those of you who are interested in these various different fields, we're going to come back to the seasons of stimulus, and we're going to come back to what season we're in and how to look at investing in a landscape in and amongst all this clickbait journalism. There's too much to choose from, Jace, but I'm hoping that you've actually found 90% of it, because all you have to do is actually just watch the news. that's all you have to do.
Well, I've been telling people for years to stop watching the news, Andy, but we'll see how we go. But listen, let's have a bit of a go at some of the things in my neck of the woods. Certainly, real estate space is an interesting time right now too. Unless you've been living under a rock, there's a few things going on. And what's going on, we'll talk about the old interest rate rises in a minute. But for me, as a property investor, maybe for you too, folks listening at home, the property world has got 2 major issues and a third looming. Number one, trying to rent something is insane. I was chatting with my brother just recently up here, and this is not an isolated conversation. One of the guys who was renting a 4-bedroom house in Pimpamar, renting for $450. The lease changed, and now renting for $780 overnight. $780. Like, just do the math on the upswing. Rent right now, if you are a property owner, an investment property owner, by the way, is looking pretty sweet. Check out these vacancy rates. Team, check out those. Every city is under 2%, which is insane. Let's say it's insane. We have five of the major cities. 5 of the major cities in this country under 1%. Andy, that means there's nothing to rent. Folks listening in at home, there is nothing.
Part of the population is transient, or it's the same sort of thing as employment statistics, isn't it? Right? There is part of the world that will not be employed through disability, through just don't want to be, through other factors. So when it gets low enough, it's zero is not zero. Zero is in the employment data. Zero is 4%.
4%. Dead right. And so, in the world of renting a property, zero is not zero. You're dead right. Zero is 1%. Right? 1% is zero. Like there's nothing. And Alison here, boom, what's that? 75, $75 increase in rent. Like that's awesome. That is fantastic. And this is only just beginning, Andy. We are still on the downward slide, folks, of the worst rental crisis Australia has ever seen. And it's only going to get worse for people who are renting. It's only going to get better unless the government gets involved, which fucking Andy, excuse the French, both you and I know that if they get involved, it'll be a cluster. However,
what about that peanut? What about that peanut? Like how to curb property prices? Put more incentives in there. I was thinking, go for it, Albanese. Go for it, mate, because property investors will have an absolute field day. It'll be like,
let's give away some more free money and pump up the market. What a bloody turkey!
These idiots. It's unbelievable.
So, mate, the vacancy rates. Sydney is already under percent. As we sit here right this moment right now, Sydney is already under 1% today because it takes 2 to 3 months to flow through to these stats. Melbourne is well on the way. Ladies and gents, I'm telling you right now, before we even start, I'm gonna delay this. There's something coming, and a few of you guys who are in the mentoring program, the coaching mentoring program, know this. What's coming in the next 3 to 5 years that is just going to explode rents and put like insane pressure on this? Put that in the chat for me while I sort of talk about the next part.
Is that I'm glad I bit my tongue there. It was a horrible thing that was in my head.
Andy. Housing approvals down they go from extreme lows already, folks. Immigration, boom. Alison, Chris, all over it. Immigration, Tim. There's 1 million people coming, folks, in the next 4 years. What? Anyway, we'll talk about clickbait in a second. Olympics, Com Games. Hey, listen, we got the Olympics, we got the Commonwealth Games. Commonwealth Games coming to Melbourne.
Newsflash, Jason, athletes are now staying in teepees.
Where are they going to bloody stay? Oh, yeah. Well, it's going to be good for us if we own real estate. So that's what I'm pretty pumped about that for all my clients, your clients, Andy. We're all real estate, real estate invested, which is great.
I'll throw this over to your side, Jace, because this isn't something which we've spoken about before, but it's something that I used to talk about. It literally just came into my head just now, and used to chat about it when I was over in London, because you look at prices of real estate anywhere near metropolises of Italy, in France, in some of the major very long established thousands of year sort of locations,
international cities. Yep.
And property is an intergenerational wealth transition, right? Because you just cannot get in.
And some people rent intergenerationally. Is that intergenerationally as well, Andy, in some of those cities? Not only ownership because you can't get in, but the renting. You pass the lease on after 30 years of renting to your children as well. And Australia is such a young country. We like one of the best things that you could ever do, folks, for your investment capacity is to visit other countries and ask about the investment concepts that you invest in, let's say, Australia, and ask how they've gone overseas, which is brilliant. So listen, and it's not going to get any better, Andy. Housing approvals have fallen. The problem right now with interest rates going up ever so slightly at the moment, but they will continue to go up over time. That's going to affect developers as well, ladies and gents, and that is going to affect not only developers, but the cost of houses. This is, I don't even know why the government's not talking about. Well, I do, because it doesn't win votes. They don't care.
It's not on the radar.
It's not on the radar, mate. It's a disaster already here. And they're going, I'm going to give some free money to first home buyers. Well, shiver me timbers. That's not going to fix our problems. That actually made it worse. giving away money, but like drunken sailors was the dumbest thing to do.
So Mr. Albanese and Morrison, what do you have to say about that? Yeah, exactly. Exactly. Just point the finger and change the topic.
Mate, but have a look at that there, folks. Existing properties for rent, Andy, down significantly in both metro and regional areas. And it's only going to get worse. What were you and I talking about today? We were talking about building an Airbnb portfolio, right?
Yep.
The other thing that's coming right now, team, is that investors are putting their properties back. They're taking them back out of the long-term market and putting them back in the Airbnb market. Andy, there's 600,000 properties. I'm going to say that again. 600,000 properties.
How many,
that
Jace?
were 600,000, right?
Properties
that were in the short-term letting market that are going to systematically come back. There's 200,000 in Queensland.
Well, mate, we taking your advice.
Yeah, it's going to extract supply from the market.
Now, when we're chatting with our clients, where they do have properties, we're telling them to do 6-month leases now.
It is absolutely essential. And, you don't want to get caught in long leases right now because not only, Andy, over the next 12, 18 months, the interest rates will go up a little bit.
Yep.
So you can't have your costs increase, folks, and not be able to increase your income. That's not a good move. So,
economically, one would argue, Jace, that it's probably not for the benefit of the country, and because if you end up with too many defaults, it actually puts a lot of pressure on the banking system.
Yeah, and you don't want that. You don't want that at all. And
because that perpetuates the problem. The banking lending freezes up, and then it's a real nightmare.
Well, there's a bit of talk about property prices going down. Clickbait bullshit again. Interest rates go up, property prices going down. Clickbait headlines, rubbish. The ability for us to have access to finance, Andy, is what will limit property prices. At the moment, right now, touch wood, it's actually a very good supply. The money supply is actually better than it has been in years right now, which is good because the world just got richer. Every Aussie who owns a property is significantly richer than they were three years ago. I got a heap of stats the other day that I did talking to all of my clients about this stuff. And, if you have a look at the average Australian, there was $200 billion this year alone added to savings. So yes. People saved $200 billion, right? There was a record $232 billion put into people's offset accounts, Andy. Like off the charts. A record housing market gain in the last 6 months of 2021 of $1 trillion in 5 months. $1 trillion. And the hits just keep coming, team. It's...
Well, the money has to flow somewhere. It has to find its resting mark.
Yes.
And there's a ramification that comes from injecting a ridiculous amount of money into the global economy. Like whether you believe it or not, and there's been good that came of it, but it was just this gravy train where America did it, so everyone else started doing it. Helicopter money everywhere. And some of it was needed. Like some of it was definitely needed. A lot of it was misplaced. And the end result, though, is that it's going to shift asset prices. And that we've been talking about that ever since the money started landing. It will shift asset prices. It will shift real asset prices the most, and real asset being food, farmland, basically property. It's going to move those assets, and those are then slow to give up their gains.
Yeah.
Whereas the share market will do that very quickly. It'll give up its gains very quickly, and then it'll bounce back and take them back up on a roller coaster ride the same sort of way.
Yeah.
But property will wait for the rest of inflation and things like that to catch up with it.
It'll
And I'm
catch up.
talking about commercial property on my side. But, I'm assuming, resi real estate is probably a similar dynamic.
Well, here's the drill. The idea that interest rates have gone up ever so slightly, and they'll march up. Andy, folks listening in, they're going to march up to maybe 4 to 4.5%, maybe 5. Right? That's the number. We all know that it's already priced in. Andy was already saying this months ago. The market had already priced it in. The cash rate marching up to 2.5%. Then there's a margin that the lenders need to make. They'll put on top of that. That makes it 4 to 5%, depending on where you're borrowing the money from. And then you've got to on-sell it. What does that do? Well, that just makes things interesting. To be honest, it's actually very good for the economy for that to leave the bottom and march up a little bit, right? And it's not going to go too much higher than that. I can tell you right now, the interest rates for investors aren't going to be as impactful as owner-occupiers. However, listen up, folks. This is really interesting. This is really important. For the last 5 years, whether I've complained about APRA more than I can remember, Andy. But those bastards, right? But what they did do 5 odd years ago, or whatever it was, they did make every lender have a significant buffer for somebody's ability to afford a loan. 5 years ago, that was 2.5% on top of the interest rate. Anyone have a guess? Andy, can you guess what the interest rate for a mortgage was 5 years ago?
For a mortgage 5 years ago, I'd be saying 7. Hang on, COVID to
5%.
3, 4, 5 to 7. Yep.
5%. Everyone's like, woo, 5%. That's cheap. Yeah. Good money, right? And
I remember at a business perspective, Jace, when mortgage rates hit 4% and you could lock them in for 3 years, I was telling people to lock them in from a business perspective, because I was like, 4%, and you've got 4% funding out of equity in your investment properties for your business, and you can turn that into 20 or 30% EBIT. I'm like that. I was like, this is a great opportunity for business people. This is a great opportunity because interest rates are so low. Let's lock this in, and then you do your job and you use that equity to build the business. And mate, that's why business has boomed. Nothing to do with governments. Nothing to do with don't let those meatheads actually claim any of the credit for the small business economy, because they deserve none of the credit. The reason why business has gone well is because they are able to borrow low, inject, and Mark, all of you are business owners out there, you put your proverbials on the chopping block every day when you go to work and feed the team and feed the nation and feed the politicians through our tax bills. But when that got below 4%, I remember in my mind, I was like, this is a real opportunity for small business. This is where you can take money out of your house, you can deploy it into the business, you can monumentally screw up your growth plans, and all you have to do is actually do better than 4%, 5%, and that's where small business started to really hit its bootstraps.
Well, mate, at that point in time, APRA was already, whether we like it or not, which, like I said, they annoy me, but they said to every person who was borrowing at 4%, there had to be already built in to the loan a 2.5% on top of, call it 4%, which was 6.5%. So 5 years ago, anyone got a loan longer than 5 years ago, Andy, could already, on their income at that point in time, afford a 6.5% interest rate. Okay? So this is the stuff that, the media miss. Well, the media fucking miss everything. But anyway, they're fucking turkeys, right? So, so now if someone got, let's say, Andy, someone got a 3% interest rate just recently, okay? Just recently. In the last 2 years, okay? On October 6, 2021, APRA actually increased that 3%, that 2.5% to 3%. So if you got yourself a 3% loan, and on top of that, the ability for you to service, you can already, folks, sitting at home, you can already afford, based on the income that you had at the point of when you qualified for that loan, you can already afford a 6%. So tell me, how the hell is property prices going to drop 50%? It's ludicrous. It's like all these people are going to sell their houses discount. It's anyway, if anyone wants to sell their property at a big discount, give me a call. I'm buying. And so's Andy. It's not going to bloody happen. Now, what will happen, Andy, you and I know this, people's ability to borrow into the future may reduce from today. So these heady heights of the last maybe 1 year may adjust backwards. The last 1 year of borrowing and property prices in some areas might adjust backwards, right? Maybe about 5%. That's not going to end the world. I can tell you that right now. So that's where we're at with mortgage rates. Owner-occupiers are exposed a lot more than investors, Andy. And, the reality is for those guys, they need to make sure they've got a few bucks set aside. And the average stats show that there is a lot of money tucked away, savings, offset accounts, incomes going up. There's some good things going on for the average Aussie right now. Depending on the industry you're in, there are some industries that really had an absolute prick of a time of it in COVID. But there's a lot of industries that actually went all right. So house prices, unit prices adjusting a smidgen. The rolling conversation, we're talking like monthly, which is, I think it's a ludicrous conversation, like managing properties monthly. But this is very normal. What happens, team? Things go up, things adjust down. That is absolutely normal. We won't reverse from the previous gains. It'll be fine. So stick in there. Property's the long-term plan. And to be honest, shares are a long-term plan as well, unless you're a good time Charlie trader, which Andy and I don't like in any way, shape, or form. But there you go. Here's what else is going on. I talked about this before. Last but not least, there are a lot, and I mean a lot of people going to enter the Australian economy. They're going to be skilled, Andy. They're going to have jobs. They're going to have income. They're going to have money. And if the government just gets on with it, then things are going to crack on. And there's Deb. Hello, Deb. Good to see you, mate.
Hey, Debs. well, this is the interesting thing. Now, there's many interesting things apart from. Oh, no, you got one more to go.
Well, this is the part where I throw to you, Andy. Bit of consumer.
Well, let me just put an anecdote. So coming into end of financial year, get together with a lot of business owners. We talk tax. We talk tax from March onwards. We're getting Paul Sidorovsky to come in and talk tax with us on Wealth, Wine and Wisdom. It was meant to be tonight, but it might be next week. We'll certainly be doing it with your mob and my mob next Tuesday, this coming Tuesday rather. But when it comes to migration and when it comes to people entering the Australian workforce at the moment, the biggest conversation that we've been having is where do you get, because when it comes to talent, and we call them talent, but there is staff in business. Staff is a stick which you hit people with. Talent are people that you love and appreciate and love and appreciate you in business. And you want to work with talent. Everyone wants to work with talent. Even talent want to work with talent.
That's it.
But when you have such a squeezing on free movement around the world, then you allow you stop allowing people who love agriculture getting from Ukraine to Australia, as an example, and working out in Australia because there's great opportunities in agriculture in Australia. But this is going to unwind, and some of the conversations that we've been having in the small to medium business community more recently is where are they? It's not how do we get them, because that's not the question. It's where are they? Because once we know where they are, or who and how to target them, then the rest becomes a fait accompli. Then we start to target and we start to go. And this was a conversation that happened more recently, which was in agriculture. What about all the displaced farmers from the Ukraine? What about all the displaced people who are in agriculture in the Ukraine? And this isn't just in agri, this is in all different business sectors, but these are the questions that are being asked. So throwing it back over to you, Jace, what do you think small business, being the biggest employer and the biggest taxpayer in Australia, is going to be doing right now? Is there going to be finding people wherever they are?
Yeah, and you know, Andy, you and I have been, looking for people. Like, we've been advertising. I've got endless ads out in the marketplace right now. And I've talked to many other business owners in the same way. I was just chatting with my accountant the other week, and there are auditing jobs. There's over 1,000 auditing jobs in accounting. Over 1,000 auditing jobs on the East Coast alone. That can't be filled, right?
They don't have auditors out in the West, mate. They just stamp it, don't they? They just go, good enough.
Good enough. Well, there's Harry. So there's certainly Harry. It's perfect timing, Harry. We're talking about you, the accounting world. So there's certain skills, there's certain things that are just at a shortage. I've got a client. Andy and I work a lot with vets, doctors, dentists in that sort of medical world. And I've got a client who's a dentist. He owns 3 or 4 dentists, not dentists, sorry, veterinary surgeries.
That's what happens, Jason, when you drink a wine that's 2 months. It's not the alcohol that's hitting you; it's actually the poison that's being developed.
I'll get a text message from my wife in a minute saying, "Get off, you're slurring." But back to the story. So my client owns veterinary practices. For the first time in 13 years, he's had to go back to the veterinary practice and be a practitioner because there's no vets. And he said it's been that way for a long time. What would happen is he would get vets directly from the UK because there was an oversupply in the UK, there was an undersupply in Australia, and he would get employment visas for them, and that's how it worked. So there's lots of industries. I think that the mining industry is going to need significant amounts of employees. You and I both know people in that space.
They'll go straight back to Asia. They'll go straight back to Vietnam. They'll go to South Korea. Where a lot of the force came from beforehand.
Yeah,
Philippines.
Yep. So, the good part about it is that most of the jobs are high earning jobs. That's good for the economy. That's good for business. That's good for, buying houses. That's good for paying rents, all of those things. So I think there's plenty in there. And, just in our little small neck of the woods, when we, the circles we travel in, Andy, there's not a business owner I know that doesn't have a job ad out right now going, I need someone. I need someone now, So it's there. The pressure is there. Lots of ability for new people to absorb jobs. And like you said earlier, Andy, like 4% unemployment is 0% because the other 4% don't want a job. They're not interested. So
or can't physically do it.
Or can't physically do it. So yeah.
And
it's going to be, oh shit, mate. I think it's been the quote of the last 3 years. It's interesting time, folks.
It's always interesting times, isn't it? But it's just interesting in a different way.
Yeah.
But these are all problems that small business solve. Mark my words, government don't solve them. They create the problem.
No, they're right.
Small business actually solves these problems. Yeah. And so to give a bit of insight into some of the things, because investing is also a world of, when you think of high risk, And so when you think of investment portfolios in general, there's this thing that Harry Markowitz came up with long time before you and me, Jace, were around.
When we were
But apparently
whippersnappers.
we still invest based on the economic theory that he came up with. Won a Nobel Prize over it. But ultimately it says that you diversify and yada, 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 all that kind of horse shit. I don't necessarily believe in ever putting money into an asset class that is declining in order to just diversify your risk. I think it's ludicrous.
Silly sausage. Yeah, exactly.
But I think all asset classes, in the growth space, they have safer asset classes and then they have more high risk stuff. And so some of the high risk stuff that I think we're going to see, and it's going to come from a necessity, because the government, mark my words, they won't get their ass into gear fast enough to be able to solve the migration, employment, property equation. Migration, employment, property equation.
And it's the three kahunas, right? It's the three big kahunas.
So we've got a few clients who already are, and when I say a few, we're talking about 10 plus, who are already looking at going, how do I invest my funds back to buy real estate, convert the real estate somehow into short-term accommodation? So this is kind of back early mining boom-esque kind of days, but instead of just building a big property for everyone, because the government will not get their ass into gear fast enough to do that. So now they're going, well, how do we take the small amount of land that we've got and create more opportunity within that small plot? And this is what small business are doing now right across Australia, in every single state. I can't talk to ACT, Northern Territory, or Tas because I just don't have the conversation. I haven't had the conversations there. Every other state, this conversation is taking place. So how do we create those opportunities? And they're real estate opportunities. And I reckon that you're going to see little venture funds pop up around these sorts of things, little private lending pop up around these sorts of things, and potentially ridiculous yields on some very, very niche type of property in the next year to 2 years. Buyer beware, because it will go up as fast, it'll go down as fast as it goes up. But these are how small business owners try and solve the problems that are created by poor policy.
There's a thing right now called build to rent. So there's a bit of a trend where the governments are encouraging large institutionals to come in and build, fucking slums, basically. So
because it worked well in India.
Yeah, it's just a ludicrous conversation. Like, what happens is investors bring great stock to market. Investors are an absolute backbone, especially in the Australian and New Zealand economy, of bringing stock to market. And, the governments are just so short-sighted when it comes to this stuff. And they mess with it so many times. Andy, I loved one of those presentations you did, over the last, it was 20 years. They've changed the super rules like 35 times or something. It was a ludicrous amount. You're like, how the hell can you plan? Like anybody, you go, all right, well, have a 20-year financial plan, because we all know it takes 15 to 20 years to get your wealth in an amazing position. But, how many times are they going to change the rules in that time? Andy and I talk about this all the time, folks. The number one risk to your wealth is the bloody politicians. They're the menaces. They're the menaces, and then there's the media and stupid decisions. Those guys right there. Yeah, but, there you go. But listen, bit of consumer sentiment, which is this clickbait rubbish, right? Like, have a look at that. People feeling confident enough, whatever that might mean, to get on with consumption, is down. But, what's going on out there in the world of a few different asset classes, mate? Inflation and sort of, some asset classes that people thought were defensive or, a good idea. You and I called these.
The old coin. The old coin.
Yeah.
Geez, when that little thing falls out of your pocket, doesn't it fall quickly?
Yeah. They're super fast fallers, right? So, from highs of, 90,000 to, lows of, 40,000 here, so it's a pretty significant thing. The volatility, Andy, maybe talk to that. Maybe talk to the volatility and inflation and stuff like that. Maybe that's, a good segue for you to sort of jump in.
I think that we when it comes to this, and we've always talked about coins, you should be in it. You should have a little bit of a dabble, like a little bit here or there, not significant amounts. You could have a couple of $100 to hundreds of thousands of dollars. But I think it's interesting to play there because I think it's a way of the future. But the way that they were sprouting Bitcoin and Ethereum was, this is the digital gold. Well, sorry, people. There's a big fucking difference between that graph and that graph.
Yeah.
Right. There's a big difference between that graph
How
and
can
that
we
graph.
put both of those graphs up at the same time? Like, all right, there we go. Maybe, can we do that? Look at that. Yeah, yeah. So gold holding its own, and then boom, down, right?
So there is. So is it digital gold? In the digital world, maybe. I don't know. Gold in digital world, whatever that actually means, it doesn't really mean anything. But ultimately, it's a growth asset, right? So and a growth asset is a speculative asset,
which creates no income, by the way, folks. Just so you know. Yep.
And so when we're talking about growth stocks, as opposed to value stocks, and there's a few different types of stocks, but when we talk about growth stocks, and this is a really interesting conversation right now for investment portfolios. Have you noticed, Jace, that the industry funds aren't advertising very much at the moment? Has anybody noticed that? Just give us a shout out if you've seen as much industry fund performance return advertising on television recently as what you have in the boom time.
Shares down, mate. Didn't go up.
They've certainly shut their mouth up a little bit.
Well, one of those things, Alison says here, like comical when you can have a thumbs up or thumbs down to influence a coin value. But what I see about that, Andy, right? And you've talked about this for a long time, the speed of money movement now is accelerated by technology, right? It's interesting time.
And when you start to talk about something like this is a slide, and so this is a belief, right, of mine. It's not necessarily the truth, but this is the way that I look at this. This is the ASX 200. Now, this initial phase, right about here, this is where they started talking about the interest rate rises. This is where Powell in the US, and this is where the Reserve Bank started to actually talk about how they're going to raise interest rates. Now, have a look at how quickly that fell. Now, in my opinion, and this is just an opinion, guys, and this is a theory that I'm working on at the moment, I go, isn't that interesting? So market dropped off. There are other things that were happening there as well, but then time as per normal, then it actually happens, and it drops almost just as sharply at that period of time. So to me, when I look at this graph at the moment, I'm kind of going, okay, so the market started to pre-price in the interest rate drops, and just by the by, that wasn't the reason for that mass volatility, but it probably would have tailed off reasonably quickly. And then as soon as we start talking about it more publicly, and the RBA and the US go, okay, we're pulling the trigger, we're going to raise interest rates, all of a sudden, bang, market reacts. So to your point, Jace, the velocity of money, very, very quick.
Fast.
The amount of people in Robinhood funds, which ironically, Robinhood may not be around in the not too distant future.
Yeah.
But a lot of these trading platforms that allow people to trade very, very quickly based on whatever clickbait that they read and whatever they see in the market, you can see that there's opportunity for professional investors who actually know, take a little bit of profit, sell out a little bit when it gets a bit too high, get in a little bit more when it shits its pants and then comes back through. So I guess the theme is the markets were expecting this for quite some time. The market started to price it in a little while ago, and for a period of time, you're going to end up with some pain in the markets from a consumer sentiment perspective. But then there's parts within the market. So when you look at some of the market as a whole, you're going to see a fairly aggressive downward trend. But I just want to show you a couple of different positions, right? And we always use the American market because it's just a greater sample size. So there's better statistics available. So this is where my fat head is. This is the S&P Growth Index. So this is what we call growth stocks. And so this is what I would consider Bitcoin to be, Jace, right?
Yeah.
Bitcoin is kind of that, it's going to go somewhere. Has it produced anything? No, but it's going to. So let's just pump lots of money into it, borrow lots of money, and let's just go and we'll get 1 billion investors in, and then we'll be bigger than Ben-Hur, right? As it goes. For those of you who don't know the Ben-Hur quote, ask your grandma. So that's what we consider growth stocks. So they don't necessarily produce great levels of day-to-day income, like your business, Jace, my business, like many solid businesses from around. The majority of small to medium businesses have good cash flow and have good income.
Yeah.
Right? The majority of businesses are not growth businesses, right? They're not businesses that just keep growing and give no income out or very little income out. But that's what these stocks are, right? So growth stocks, and this is just a year view, US, S&P 500, happy days, less happy days. If we took the graph back 2 years ago, you'd still be smiling like a Cheshire cat, just by the by, because one thing that investors tend to do is they tend to go, but I had this much yesterday and I've got this much today. And beforehand they went, I had this much yesterday and I've got this much today. It was a good 6 months, but then, oh no, now it's terrible. You can't think like that when you're investing.
Yeah.
It'll be the most nervous journey of your entire life.
Yeah.
But when we have a look at this chart, we go, well, okay, it's negative 5%, all right, over the last year. Not a huge decline, but that's the growth side. The value side isn't actually down too much. And here, I reckon this will actually come back up. That's my personal opinion. Don't go and buy it just on that. But I reckon this is going to come back up because when I see slides like this, I go, this is very, very sentiment driven. So value.
Yeah, totally. Yeah.
Value is like small business. This is where companies have really good income streams. And look at it. It really hasn't done anything in the last year apart from hold ground.
Yep.
Really hasn't done anything. Growth stocks have been all the vogue. But if you took these charts back even further, value stocks have just really done nothing for a while. But the growth stocks went like a rocket into space. And the growth stocks went like this.
Yeah.
Like literally like that. And now they're like here.
And growth and value, explain that because, like, is it something, for those listening at home, Bob's talking, hey, listen, I'm not going to buy anything about a dividend anymore. So,
and that is exactly right, Bob. Like when interest rates rise, and so this is and I've been trying to explain this to people, and since I've been hanging out with you, Jace, it's very difficult because we actually talk about it in different language terms.
It is. It's a different vernacular, right? Yeah.
There's a reverse relationship in the investment world as what there is in the property world. And even commercial property. So when you talk about interest rates and interest rate rises, when it comes to the ability to pay a property back off, you're talking about, principal payments and interest payments and the variation between that and the rents.
Yeah.
And but the variation between that and the rent, well, the variation between the interest rate and the rent, that can be controlled to a degree. The variation between the interest rate and interest payable versus principal when you're principal and interest, well, that can't be controlled other than pushing the loan term out further.
Yeah.
And so the interest is almost disproportionate to the amount of principal that you pay.
Yes.
Like almost insignificant. So when you raise it from 2 to 3 or 2 to 4, the difference is negligible to a degree, right? Comparatively. In companies and in stock markets, that's not the case. In growth companies, they might borrow $100 or $1 million, and they borrow that, and so their cost of funding is 1%. Right, so all of a sudden they're $10,000 for $1 million worth of capital that they deploy, and then they borrow another, and then they're so $10,000. But when that goes up by one, or when that goes up by 100%, that literally means their cost of funding doubles.
Yeah.
And when you're talking about big growth companies that aren't borrowing $1 million, they're borrowing 50, 100, $200 million, and they're not producing incomes, like Bob said, they're not producing good dividend yields, then all of a sudden that gravy train, that's over, right? Because you got to pay the piper.
Yep. There's always something to pay. Yep. You can only kick it down the road so far.
And that's where you see this difference between growth stocks actually having a bit of a swan dive. And this is where traditionally in markets, growth dies and value thrives. And we've been talking about
it. The values attached to some income producing like calculation, right? Yeah.
So think of things like Telstra in Australia. Yeah,
no, I don't want to think they're a pain in the ass. They're
such a pain, but you still pay them, don't you? You still pay them every week.
I don't miss my bill. I don't miss my bill.
You're not allowed to miss your bill because you get cut off from the rest of the world. No matter how shit their service is, no matter how poorly you are connected, you always pay that bill. Right? But you do. And no matter how much is going on in the world, you switch on the lights when you wake up in the morning.
Yep.
No matter what's going on, you fill your petrol into your car or you don't go anywhere. So there's companies that are income producing companies that, regardless of what happens in the world, to a degree, they get affected, but they are going to produce annuity income streams.
Yes.
And in times where people go, I invested $10 and now I'm a millionaire, and that's a bit obtuse, right? But you get on the Facebook growth journey, people would be staggered if they knew how much money Facebook actually made in comparison to its market capitalization. I don't know it off the top of my head, but it's ridiculous.
Yeah, it was like Amazon for 15 years as well, wasn't it? It was like they made nothing, and yeah.
Crazy, right? Yeah. And Jeff is as much a lucky business owner as he is just an amazing business owner. Because sometimes, you know it as well, Jace, is that sometimes business can be a bit of luck. Fortune favors the brave. And if you're the brave and you're prepared, then you can take advantage of the opportunity. But if the market goes in the opposite direction, if Amazon was getting set up right about now, he wouldn't be getting funding about now. It wouldn't be taking off and it would be declining. So value stocks are those stocks whereby there is a solid income stream that's backing the underlying investment. And that is where the flight tends to go right about now. We talk about, and I've shared this a few times, but in times of inflation, what do we look at? We start to look at real estate, right? So fixed assets. We start to look at real assets, right, which is different to real estate, but real assets, physical, tangible assets that produce stuff. We look at food, farmland, and we look at gold. And when we start to look at these sorts of things, and I'll jump back in, so when we look at it, yes, gold is going up, and I'm not saying go and buy gold, right? That's not what I'm saying by any stretch of the imagination, but gold is a natural sort of safety that people go to. Gold has started to do very, very well since 2020 when people were uncertain, because markets don't like uncertainty. And then food. And if you have a look at the food index, like it's not going, and I'm taking a bit of the piss here, but we've got the Big Mac index, and it's growing and it's growing and it's continuously starting to do so. It did actually drop there in 2015-16, but in the agricultural sector right now, for those of you in the know, it is farmland booming, steak, cows booming.
Booming. I had 40 head of cattle on my little farm, Andy, and I sold some and I can't buy them back. I can't replenish my herd. They're too expensive.
Yeah, it's
crazy.
And that's why you keep a couple, you keep the girls, you rent the bull, and you go again.
I've got 12 and they're all pregnant. So they've all The bull jumped the fence actually, which was quite good. I was happy about that.
It's running amok somewhere else.
Yeah, I was like, oh yeah, let him alone. But yeah, exactly. It's the cycle, right? It's the seasons.
And to tie that back into equities, and this is what people don't understand, is there are companies in food, there are companies in real assets, there are companies in real estate, there are companies that thrive off gold mining companies, companies that support gold mining companies, resources, employment opportunities in gold mining companies, recruitment agents for gold mining companies. All of these industries exist, and they're in a different kind of world. They're less flashy than the big growth days where people go, Domino's went from $15 to $32. But what's happening now is you will see potentially the index stall go sideways, as I showed you in some of those graphs, maybe go back up, but the mix of the index is going to be different.
It'll change. Yep.
So
The top 200, the top 100 will change. Yep. 50 will drop out and 50 new will come in. Yep. Or 50 old that dropped out ages ago, but now they're back.
And look, the banks might end up coming back to be, the darling buds as well, because they're
Well, I think there's going to be
they're not paying out. They're not lifting term deposit rates as far as they are. I mean, they were quick to pass it on. They got a bit of hammering, but you look at your credit card, you look at your term deposits, you look at your savings account, and then
they were quick, mate. It was 30 seconds later, mate. But here's my prediction. I'm going to do this one, folks. Andy and I've done this. Hey, we've been pretty good actually. I wouldn't mind going back actually, Andy, and nailing our predictions. But here's my prediction: we're going to get a refinancing boom, which means, team, there will be more refinances done or mortgages reset in the next 2 years than there was in the previous 5 or 7. Like, it'll be on like Donkey Kong, and it'll be actually well worth people doing it.
Well, it makes a bit of sense, doesn't it? Because
yeah,
the best way for the banks to refinance is to lower the amount that you can take out, but give you a little bit so that they can go through the process, put the cost of doing it into your hands as the consumer.
Think you're better off. The uneducated will get caught. The smart people will get what they need.
And their balance sheet gets better because they can price in the asset inflation, which they wouldn't have right about now.
They wouldn't, mate. It's coming. And folks, Andy, banks employ their own economists, and that economist's job is to pretend that they're smart, and they go, "Oh, folks, property prices are going to go down 20%." And everyone goes, "Oh, I better lock in my loans, better do my interest." Like, they better do something. It's a bunch of clickbait frenzy bullshit as well, because that person works for the bank. They're not independent economists. It's bullshit. It's complete bullshit.
Yeah. There's some interesting things going in and around that in the world of equipment finance. There's a lot of volatility in rates at the moment. It's really interesting, and it's not deserving. It really is an opportunist world. Because
there's going to be some dodgy opportunists. I mean, Jeff, look at this. Look, check this out. I saw an ad for 7,000 to refinance. Absolutely, that's what's going to be out there, team. Jeff, and Jeff's smarter than that as well. What's happening right now, though, Andy? Certainly in New Zealand, where some players, Resimac, entered the market in New Zealand, offering now 20-year interest-only loans. I love interest-only for property investors. Principal interest on your owner-occupier, that's fine. But there's going to be some very interesting times when it comes to finance in the next 2 to 5 years, and some of those more. Yep.
They're going to get inventive. The banks are going to get inventive as well.
You watch. It'll be back. There'll be structured
irresponsible lending at its best.
It'll happen, Andy. You and I know. All right. Well, why don't we call that one done and dusted, mate? Because there's so much to bloody talk about. I reckon we could friggin' keep going for another hour, but
yeah, well, this is what happens when we don't catch up for a couple of weeks. But
I know. There's plenty to talk about. We have truckloads to talk about, folks. So we will be circling around for next Friday. We've got it's been a bit bitsy the last month or two, but Andy and I are pumped about getting things going. We've got Paul Sidorovsky, an absolute guru when it comes to business and tax, and he's going to join us coming soon. I think on Tuesday. Andy's
Tuesday
going to go live
within mentoring and within and our private clients, and then hopefully next Friday, not confirmed yet, but if it's not Friday, next Friday it'll be the Friday after, and we'll get him in to talk all things budget, tax, how to prepare for the end of the year. Maybe the politicians might have done their dash by then, and maybe we might have a bit more headway. But he's always is probably the most charismatic accountant I've ever met, and he's pretty much on the button as well. He's a very, very astute character. So we'll try and bring him into this forum next Friday. So stay tuned, and certainly within our respective clients, we'll be doing a specialised one, where we can talk a little bit more about it on Tuesday evening.
Happy days. Well, keep an eye on that, folks. Well, my friend, fantastic to hang out with you, folks. Good to see you guys. I think that's it. Well, it's a good night from me, and it's a good night from
him. Good night, everyone.
Good night.
Good night, Australia.
Good night, folks. You guys be awesome. Be well. Bye-bye.